Another day, another story. The global economy is a complex and interconnected system where the economic health of one country can have ripple effects on others. At present, the United States is facing recessionary challenges that have the potential to influence not only its own economy but also the global economic landscape. This video aims to shed light on the current recession issues in the USA and explore their potential future impacts on both the domestic and global economies, supported by relevant examples. The present recession issues in the USA. Supply chain disruptions. The COVID-19 pandemic has severely disrupted global supply chains, and the USA has not been immune to these challenges. Factory closures, transportation disruptions, and labor shortages have hampered production and distribution, leading to supply shortages and increased costs. Industries reliant on imports, such as automotive, electronics, and pharmaceuticals, have experienced significant setbacks. Inflationary pressures. The USA is currently witnessing rising inflation rates, primarily driven by increased consumer demand, supply chain disruptions, and a surge in commodity prices. The Federal Reserve is grappling with the delicate task of balancing price stability and promoting economic growth while keeping inflation under control. If inflation persists, it could erode consumers' purchasing power and lead to a slowdown in economic activity. Labor market challenges. The pandemic-induced recession has caused significant job losses and disruptions to the labor market. Many businesses have shut down or downsized, leading to widespread unemployment. While the economy is gradually recovering, there are ongoing concerns regarding the quality and sustainability of newly created jobs. Structural changes, technological advancements, and automation pose additional challenges for the workforce. Future impacts on the USA. Reduced consumer spending. Recessions typically result in reduced consumer confidence and discretionary spending. As job security concerns persist and inflationary pressures mount, consumers may tighten their belts and prioritize essential purchases, leading to decreased demand for non-essential goods and services. This, in turn, could negatively impact businesses across various sectors, including retail, hospitality, and entertainment. Impaired investment and innovation. During periods of recession, businesses often face difficulties in securing investment and financing for new projects and innovations. Uncertain economic conditions and reduced consumer demand may discourage investors from taking risks. Consequently, entrepreneurial ventures and research and development activities may be stifled, limiting the potential for future economic growth and technological advancement. Fiscal and monetary policy challenges. Recessions necessitate decisive policy responses from governments and central banks. The USA's ability to implement effective fiscal stimulus measures and monetary policies will play a critical role in mitigating the recession's impact. However, policymakers must strike a delicate balance to avoid exacerbating inflationary pressures or creating long-term fiscal imbalances that could harm the economy in the future. Future impacts on the global economy. Trade and global supply chains. The USA's economic performance significantly influences global trade patterns and supply chains. If the recession persists, reduced consumer spending and a decline in business investments could dampen global demand for goods and services. This would have far-reaching consequences for export-oriented economies and countries heavily dependent on the USA as a trading partner. Financial market volatility. Recessionary concerns in the USA can trigger heightened volatility in global financial markets. Uncertainty and risk aversion may lead to capital flight from emerging economies to safer assets, impacting their currencies, stock markets, and borrowing costs. In extreme cases, financial crises in one country can have contagion effects, spreading instability to other nations. Geopolitical implications. Economic recessions can have geopolitical implications, as nations compete for resources and influence in a challenging economic environment. The USA's economic strength and stability play a crucial role in maintaining its global leadership and influence. However, a prolonged recession in the USA could potentially weaken its position on the global stage, creating opportunities for other nations to assert their power. Shifting power dynamics. During times of economic downturn, countries may seek to protect their domestic industries, impose trade barriers, or pursue protectionist policies. This can lead to trade disputes and strained international relationships. As the USA grapples with recessionary challenges, other nations, particularly emerging economies, may seize the opportunity to expand their economic influence and challenge the USA's dominance in certain industries or regions. Resource competition. Economic recessions can intensify competition for scarce resources such as energy, minerals, and agricultural products. As countries strive to secure vital resources for their domestic needs, geopolitical tensions can arise. The USA's ability to navigate resource competition and maintain stable trade relationships will be critical in shaping its geopolitical standing. Global cooperation and institutions. During times of economic uncertainty, international cooperation becomes essential to address shared challenges. Recessions can strain global institutions, such as the World Trade Organization, WTO, and the International Monetary Fund, IMF, as countries seek to protect their own interests. The USA's engagement and leadership in these institutions will determine their effectiveness in fostering cooperation, resolving disputes, and stabilizing the global economy. The current recession issues in the USA have far-reaching implications for both the domestic and global economies. Supply chain disruptions, inflationary pressures, and labor market challenges are significant concerns that need to be addressed. Looking ahead, the impacts of the recession on reduced consumer spending, impaired investment and innovation, fiscal and monetary policy challenges, financial market volatility, and geopolitical dynamics will shape the future landscape. It is crucial for the USA to implement effective policies to mitigate the recession's impact, restore consumer confidence, encourage investment and innovation, and maintain stable financial markets. Additionally, international cooperation and a commitment to open trade will be vital in navigating the challenges and minimizing the adverse effects on the global economy. As the USA seeks to overcome the recessionary challenges, its ability to adapt, innovate, and collaborate will be instrumental in shaping a resilient and sustainable economic recovery, not just domestically but also globally. Thanks for watching.